Let's start with a weekly chart. Things turned bearish when gold formed this large bearish engulfing candle on the weekly time frame when the breakout above 1900 failed. 1900 had been a key support in the past before it broke down back in April of last year, and when price broke below that level, it went on to drop big time before staging a sharp recovery in October. That rally has now ended by the looks of things, and the path of least resistance on this time frame is to the downside. Now we have zoomed in on the daily time frame. So the breakdown happened on this particular day at the start of February when all the major central banks decided to raise interest rates in policy decisions that were deemed to be more hawkish than the market had expected. When gold broke down below 1900, it stayed below that level for several days, printing these indecisive daily candles before breaking down further when this bearish engulfing candle was formed on the daily time frame, thus confirming the reversal. So since that happened, every major support level has since turned into resistance. For example, 1860 was support here. When price broke below it, it turned into resistance on several occasions before price broke further lower. Price found support at 1843 momentarily before that level broke down, and since then every attempt to break back above that level has been rejected. The path of least resistance on gold looks to be to the downside because of the recent bearish price action, and I will maintain that bearish view unless gold goes on to close back above 1843 or 1844 level, which it has struggled to do in the last several days. So that level needs to be reclaimed by the bulls for us to turn bullish on gold in the short-term outlook. As things stand, it could be heading lower. One of the targets I've got on this chart ones with this high that was created before gold's last drop, before it staged a massive recovery back in October or November of last year, that eventually saw price go back above 1808. So that level now is kind of a pivotal level, right? It needs to hold that level insofar as the bulls are concerned. If it doesn't, and if we go below that level, then the next target could well be 1775, which is the 200-day moving average, and then we can plot our Fibonacci levels to see where the next Fibonacci based target could be below that 200-day average. Okay, so if I drop my Fibonacci's from this low to the most recent high, you can see the 61.8 retrace, which is a very important Fibonacci base level, comes in at 1746. That is the next big level for gold should price break below 1808, and then eventually the 200-day average. So yeah, those are the three targets. The 1808 level, the most important level for me is 1808 right now. Then the 200-day average at 1775-ish. Below that, we have the 61.8 Fibonacci retrace at 1746. Those are the next key technical levels for me. As things stand, it looks like we could be heading to at least 1808 in the short term before gold decides on its next move.